Around 315,000, but again, it's not the point.
Bertie Ahern's former partner Celia Larkin was also given a fast-track loan of 40,000 last year without providing documentation. The loan is connected to transactions being investigated by the Planning and Payments Tribunal in its inquiry into Mr Ahern's personal finances and the purchasing of a house in Phibsborough.
I know Celia Larkin never submitted any income details. I also know that roughly in March, April 2008, she was advanced a fast-track loan of €40,000. And again, no income verification of current accounts. No required documentation was requested.
Even the former Minister of Finance, Charlie McCreevy, seemed to know who to go to get a quick loan.
Mr McCreevy bought a property for 1.5 million. He was sanctioned 1.6 million. Now, under our guidelines, we didn't advance 100% mortgages. Home loans for the purchase of a family home was between 90 and 92%, and for residential investment properties it was between 70 and 80%, but he received over 100%.
And did you provide the required documentation at the time?
The required documentation wasn't produced.
Former bankers spoke in this programme about the breach of procedures within banks, but most bank employees are too afraid because of strict confidentiality clauses in their contracts. Although some recent protection was given to whistleblowers in relation to NAMA wrongdoing, there are those who say we now need a whistleblower charter to get to the bottom of the banking crisis.
We need to see a much fuller charter that applies not just to NAMA, but applies to the financial regulator, to the central bank, to many areas of activity where whistleblowers could be of immense value. But most of all, we need a whole new ethic within banking.
What we could say with some degree of confidence is that whistleblower legislation would have led to the exposure of this wrongdoing at a much earlier stage. It would have saved the country a fortune, and it would have saved the country its reputation in the eyes of the international community.
While we are unlikely to ever know the extent of what went on in the banks during the heady days, we know who's paying for the hangover: the taxpayer. The first cost of the crisis was the state guarantee introduced last October. Taxpayers' money was used to guarantee any bank borrowings which were owed, estimated at €440 billion.
It was essential for the government to take the steps they took. Now, it was a brave decision, and it marked great leadership and great positive thinking.
More recently, the government has taken the biggest gamble with taxpayers' money in our history by taking over the bank's loans to clean them off their books. Through the National Asset Management Agency, the government is paying €54 billion for €77 billion worth of loans, a discount averaging 30%. The biggest transfer of loans comes from Anglo at €28 billion, with AIB not far behind at €24 billion. And it's clear from a list of the worst commercial deals done at the height of the boom that AIB features most heavily. For example, the AIB-backed Millennium Park at Osborstown, Kildare, has fallen 80%, from €320 million to €64 million. And the AIB-backed former Vet College on Shelbourne Road in Dublin has fallen 60%, from €171 million to €68 million. The land is now used as a car park. Similarly, the glass bottle site in Dublin, where Anglo was the lead lender, has fallen 80% in value. Despite NAMA taking the bad loans from the banks and swapping them for bonds so that they can generate cash to get them going again, they are still broke.
NAMA is only going to be a drop in terms of what these people owe to their lenders.
As a result, banks still need to borrow cash, and plenty of it, from the government, even though it costs dearly for the government to borrow on international markets. So far, AIB has got €3.5 billion from government and is now predicted to need a further €4.4 billion.